Bum, bum. Oh yeah. Got a nice stage 2, guys. The stars could be aligned for American Express Company, AXP, on the New York Stock Exchange. So with no further ado, guys, let's take a look at the monthly candle chart. We're going to start top to bottom approach, time frame wise. Let's see what we have. Here's my monthly defined breakout lines. Ooh. Already breaking out. It would be confirmed once we get that July candle to close in a few days. Measured move, almost attained, but that's okay. On the monthly candle charts, on these small takeoff patterns, it happens often that the risk reward ain't good because that candle that confirms a breakout already attains its target on that same month. But what we're using it, the purpose right now is to use this to confirm the trend on the higher time frame before we drill down and do the weekly Stan Weinstein. But it's also good sometimes you just see and it gives you get a look, bigger patterns. Was this a takeoff pattern? Not really. This previous resistance here. It broke out through, but came back in. So right now, I'm pretty sure that this is the pattern we're dealing with. After that, we'll have to go. There's no bigger pattern to play right here. We'll just have to see how this morphs. And if you notice, I added the 12-month moving average, and rounds up to a nice year. I'm starting to read up on the strategies, people using monthly candle charts, and I just like the basic. I just like doing this way, classic chart trading. But if you want to see the trend, if you have difficulty seeing the trend, you could use that. Any close below the 12-month moving average, that could be a warning sign. Right now, I see closing always on top. The close is what's important. Right here would have been the end. Here would have been the entry. Nice ride. Look, there's a lot of overlaps. You'll see that, right? Stan is a trend based. What's a moving average? It's a trend identifier. Any frameworks that's using trends, they're going to have a lot of overlaps. You could keep this super simple, right? Stan, he went deep dive, adding a lot of criterias, clues, observations that he had that would give him better signals and less whipsaws to enter at the beginning, as you can, and exit before most of the run is done. And you see it here, even on a monthly candle with the moving average, the 12-month moving average. As it's starting to turn upwards. There you go, man. That's a lot of momentum. Monthly candles, man, a lot of momentum. That's why you have to respect it. If you have an uptrend on monthly candle defined, this nice of an angle of the moving average going upwards, got a lot of weight in your favor. These pullbacks here, they're going to be pullbacks, simple corrections, not reversals. And until you start breaching, start tempting the 30-week moving average, the 12-month moving average. But right now it bounced off nice, and it seems to want to continue after this consolidation here. Okay, let's zoom in. Stan Weinstein. Okay. So this one, you see, gave us a little signs of... so a little stage 3 here. All this here, you see, you're out of the green zone on the Mansfield Retro Strength Indicator. Well, it's more of a just Mansfield. Right? Mansfield's above 0 compared to the SPX. The green is if the 30-week moving average is angling upwards, inclining, and if you have the close of the candle is above the 30-week moving average. If it's below any of these conditions, then it turns gray. And if it's completely the inverse, then you're red. If the moving average is declining, if you're below the zero line on the Mansfield relative strength versus the SPX, if you have a close below the 30-week moving average, then you become red. So this is stage 1 and 3, pretty much zigzagging. But right now, see, this is what's nice. After this little market churn, this is the weekly defined breakout line. Here's the monthly. Remember, I always say whatever price action you have above the monthly defined breakout line, it's noise. Could give false breakouts. If you have a confirmed breakout above both those levels, then you know you have harmony between the monthly and the weekly. And it seems to be doing that right now. It actually did it. But now we have a couple of more days to wait just to make sure it don't revert back in. What I really like to see is volume. That squiggly line. Ooh. There you go. Nice. So I want this volume right here. Twice average of the previous 4 weeks. I want that. I want my next candle to stay above here. I don't know if it's going to play. We're going to get scared. As long as it closes above, we're good. Triple confirmation, right? Inclining 30 week above horizontal breakout line and the volume and above zero Mansfield. And look at that. I love that. Bouncing off the zero line, going upwards, starting to outperform the SPX. Very, very positive. So we have to wait at least for the end of the next week or the end of the month, which is going to come first. Make sure we have that close above and see how that volume is going to look coming week. That's pretty much how stage 2 looks like. But now we have forest to tree approach, guys. Forest to tree approach on adding on top is to make sure that our index, New York Stock Exchange, our sector, financials and industry, consumer lending or consumer finance, they're all aligned. So let's go right here, see if the index changed. Last time I checked it. And this is the state of the New York Stock Exchange. Wasn't a stage 3. It still is. See at the end of the month if it could close above that. Tempting to continue stage 2 continuation breakout. But still underperforming the SPX 500 as a whole right here. Really, really underperforming. So keep an eye on that. See if the stage 2s continue. New York Stock Exchange. Sectors. Financials right here. Same thing is American Express precursor, like I like to call them. If it's part of the sector of financials and the financials, the graph doesn't look as nice as the American Express one, the AXP. That means the AXP is a leader in that sector. The other ones are dragging it down, it's dragging it up, and hopefully more of the bottom ones will start behaving like AXP and right, see gray zone. So as soon as you go upwards above the 30 week, above the Mansfield, outperforming the SPX for that sector, 30 moving average angling upwards, close above the moving average, then you'll have a stage 2 here. But it's not there yet. You want that candle right there. Right here, you want the candle. Close above, right there. So let's see how that behaves. And you want this to turn green, guys. Green means go. Industry, how we aligned there. Industry, I said, was consumer finance. And this is the least pretty of right here, there. Guys, stage 3, man. Stage 3. Got some Ichimoku support here, underperforming the SPX. So that is not good. Consumer finance, what is that? Okay, now we're going to do something. We're going to compare AXP, American Express. We're going to go to Mansfield. We're going to compare it to its industry. And you're outperforming your industry right here. So you're the leader, part of your industry. You're the ones you're pushing upwards against the rest. You don't want the other ones to break you down. It's good that you're one of the leaders, but you also want the others to join you. So that's why, as a whole, we want to make sure that the finance really picks up and doesn't become a stage 4, dragging you down, dragging down the sector that it's in. And that sector, as a whole, you want it to be aligned with the New York Stock Exchange. But still looking good, guys, for AXP. Keep an eye on it for potential stage 2. And if the sector could pick up and the industry start giving signs that it doesn't want to go into stage 4, remain stage 3, or at least going into stage 2, then this could be an A++. All right. Keep it short, guys. See ya. Ciao. Green means go.